What's up, everybody? Welcome back to the channel. This is going to be the video on gap fills that I promised last night in the video I made last night of the AMC update. Before we get started with the video, I just ask that you please drop a like on the video after watching if you indeed like it, and consider subscribing if you want to see more content like this. Like I said last night, I've got a lot of stuff I'm planning on putting out here in the near future, and I think it can be some pretty valuable information for some people. So that being said, let's get right into it. If you want to know what exactly a gap fill is, I just did a quick Google search here and came up with this page here, New Trader U. Let me get over here to the PDF version of it where I've got some stuff highlighted here. So first and foremost, obviously the main question is going to be, what is a gap fill exactly? So gaps on the chart show that there were no buyers and sellers connecting at price levels. Gaps happen mostly when news comes out that instantly changes prices to much higher or lower prices than they were previously trading at. A lot of times this happens overnight. You will see it close after hours at one price, and this is almost every stock every day at some level will open pre-market trading a little bit higher or lower than they were closed at in the after hours the previous day. There are a handful of different types of gap fills, and I'm going to try and cover as many of them as I can in this video. So let's continue here. The common sayings by traders that you probably hear a lot are gaps always get filled. You know, I hear that one way more often than I hear these other ones, but gaps always get filled, and for the most part, that is the truth. A gap on a chart is considered to be filled when the price action moves all the way up to the closing price. When the price action moves back through the open gap area where transactions were missing, price must retrace all the way to the closing price of the previous day before the gap. That's considered filling the gap. Once the price is returned to where it was before the gap day, it is technically filled. It sounds a little confusing. Basically, if a stock gaps up in the morning and you see a literal gap in the chart, that gap usually gets filled that day or by the close of the following day. If the price moves inside the gap area but does not move all the way through, that is called a partial gap fill. Gaps do eventually fill, but that could happen after a strong move or trend takes place that can take a long time for the market to change direction. And in this case, one of the examples obviously that I'm going to be using is AMC. I think that is a perfect example for multiple reasons, and there's also one big reason that I have found while looking through the charts that pretty much told me when I saw it that this entire dip back to the $30 level was just inevitable. And I will get back to that. We'll get more into that further into the video. So the path of least resistance is generally in the direction of the gap. And what that means is not the direction of the gap up or gap down, but the direction back towards that actual gap. So if you gap way up and then it moves, the price moves further. Okay, you know what? I got a perfect example for you. Let's go over here to the chart that I have pulled up for Nano Vibronics. That's been popping off a lot lately, right? And you can see right here, you can see the literal gap right here in the chart. And you can see that it did get filled right here with this candle 2 days later. So it gapped down on the 27th and it moved further away from the gap. As you can see here, opened here at $1.70, $1.69 and closed at $1.47 with a low of $1.42. So it pushed further away from the gap, but remember what it said, the path of least resistance is typically towards the gap. That means this direction, back the direction that it gapped from. So that green candle here fills this gap created by these red candles. That's the kind of move that you're looking for in a gap fill scenario. And as you can see, This big red candle here is the result of the price on the 23rd closing at 261, excuse me, and the following day the price opened at 334. So that's a huge gap, right? The price opened up here. It tried to push away from the gap, but got sucked right back down. It filled the gap and then even moved even further down the charts. Now, gaps are not just this here. Gaps can also be, let me blow this up a little bit. Gaps can also be considered this giant candle here is somewhat of a gap. You know, you had an open way down here and all the rest of the price action way down here. I had to pause real quick and take care of something, so I'm not sure exactly where I left off. But so this green candle also considered a gap in my opinion, right? You've got all this price action. Previous price action is the high. I mean, if you want the recent high, if you really want to look at like the high 235 here on this candle, but you know, here's your main level of resistance back here, recent resistance, and a little more here. So this giant green move here, and then the continuation into the next day, that gap is from about this level, you could consider it, or this level you can consider. I mean, the move started way down here. So here's where the move began. So it left a gap above this resistance at $1.50. It left a gap in price action. I mean, it's pretty much just wicks from that point on in recent history, right? So this remainder of this move, I could also consider that a gap. I would, you know, and look what the price did. It came all the way back down to this previous high before it started rebounding. And then the next candle filled this gap that this created. So the gaps usually get filled on the way back through. You know what I mean? Like if the gap was created on the way up, this gap created, you know, filled this gap on the way down, continued on, filled this gap on the way back up, and continued on. So this, like it said earlier, the path of least resistance towards the gap. You know, look how much further this went than the actual gap created. Same here. Look how much further this went. But then here you go, big long wick. Not a pure gap in the chart, but a gap. Like this big wick needed to be taken care of, filled up with candle bodies, right? That's what's going on here. This little, I anticipate that you're going to get a few days or at least a couple candles that have to fill this wick out for the most part before it continues on in any direction one way or the other. So that covers a couple different types of gaps, you know, the literal gaps and the giant gaps in the chart that are candles. If this had been 4 candles, not so much considered a gap, you know, 1, 2, 3, 4, those are solid, you know, solid moves. Not so much a gap, but this one giant candle considered a gap in my book. But let's go and look at another example. This is actually a stock and a move that I've been keeping an eye on for a while. They had a reverse split back here on the 16th, which immediately created a sell-off. You know, it had a jump and then an immediate sell-off. So I'm looking, this is a gap play where I'm looking for it to return to those pre-split levels. I mean, the only reason this dropped is because of their reverse split. These almost, I don't want to say almost always, but a lot of times they recover at least at some point for a time. They bounce right back up to where it was at the split before continuing. If it's going to drop, it's going to drop. But if it's going to keep, I mean, and this was trending up. So it was trending up before the split. The split happened, it plummeted, and I mean a lot. I mean, if you look at just this high here was almost $11, and it's trading at is trading at 350 as at the low, 360 here, recent low. So even a partial fill, you see it tried to fill this gap, didn't. Created gaps in and of itself while trying to do that. Gap down here, came back up, needs to fill this gap, right? You got a candle, fills that gap, kind of. I get, I don't see these as gap. These are still big moves. I think eventually, and that's why I'm watching this closely, it's broken out of the downward channel that it was in here from that sell-off. So I'm looking for this bounce back up above this level where it was previously seeing resistance before this dip. I'm looking for a nice dip and a rip that can potentially lead to a gap fill of the potential filling all the way back up to $10-11, anywhere from 9 to 11, but there's a couple levels from in between that it has created little pit stops on the way that we're going to have to keep our eyes out for too. So, there are multiple ways to do gap fills. I can't pick like this entire thing. If you go back even further, this entire move here was what? To fill this gap, It's this whole deal was to fill this gap. So this is actually a very strong level here of support and resistance. So if it gets back up above there, you're looking at a potential huge gap fill. It's trading at less than $4 and potentially up to $11, just filling the gap. Last thing I want to touch on, how can this correlate to AMC's chart and what's happening right now with the AMC stock, and how is it predictable? Every morning's move, how can you predict and potentially take this knowledge that I'm about to share and use it to make money wherever you so choose to make money using this strategy? AMC always fills its gaps, always. I'm talking every single morning it will fill its gap almost, and if it doesn't, you best believe that it's coming back for it. You can see, if you've paid attention to AMC, you know how it is. The pre-market, it can go up and then it opens at 9:30 and it just crashes right back down, or it's down and it opens at 9:30 and it goes right up and then it comes crashing right back down, or whatever it ends up doing. Those are gap fills. That's what's happening. And if you look here, I will go down to the 1 hour chart. Let me turn extended hours on. All this, nothing. It means nothing for the overall price action unless you plan to play the gap fill. And what do I mean by that? Let me find a more volatile situation. But you know what? This morning, it was a perfect example. It closed yesterday. What was the close of yesterday? Right here. It closed the day at 38.13. It opened the day here this morning at 37.72. And what was the very first thing that it did? Very first thing it did after opening this morning, 38.72 was our gap. Was that right? That's where it closed last night. Very first thing it did this morning, filled that gap. Okay, every single morning AMC does this. Wherever it closed the prior day, it does not matter where the price opens the next day, it will fill this gap. Maybe not in the first 3 seconds, but it will every day fill this gap. And it didn't quite, I'm trying to remember which day it was. The day we had this move, we had a gap here. This was Wednesday, so we had a gap to fill from here to where it closed the other day. The previous day. So it opened here. It didn't quite fill that gap. And I was like, it didn't quite fill the gap, but it went plummeting back down. I was like, I had told people, I said 36 is probably the bottom here. They may get it down, but I don't see how much further they're going to go than that. And it came down to 36, and I'm like, it never filled that gap. And what does it end up doing? Fighting its way back, fills the gap, and then gets rejected here. Went a little further, got rejected. Every day at some point it will fill the gap. Maybe not that day, but if it's a large gap, it may not fill that day, but it will fill the next day or two if it's big enough gap. So that's how you can, and it's not just for AMC. I just noticed it with AMC because I've been watching it a lot, and it's very, very, very consistent every single day. If it opens up 3% down, you can make 2.5%, 3% within the first 30 minutes of the day with this strategy. I don't recommend it, obviously, but there are people out there who aren't just holding AMC for dear life and are trying to make money trading, not just holding on to it. So you got to pay attention and respect those people's opinions too. If you are one of those people and you do like to try and make a quick buck on gap fills, or you want to give it a shot now, keep an eye on AMC and see for yourself. Every single day it will fill those gaps. And like I said, it said on the chart, the explanation I showed you earlier, gaps always get filled eventually. And this is what I want to show you. When I saw this, it just made me laugh, right? I honestly, when I noticed this a couple weeks ago, I just laughed. I said, you got to be kidding me. Is this real life? So what am I talking about? We talked about filling gaps, right? Let's take a look at this candle specifically. This one right here. Well, that rectangle is not going to work because that'll work. That candle, we are looking at July 15th. This candle. Now let's go back, follow these trend lines back. Really? So all this whole entire move was for what? To fill that gap. I mean, between this green candle and this previous red candle, the following red candle, that gap is filled perfectly with candle bodies. This entire dip, this entire pullback. Now, okay, cool. There's a gap, it filled, whatever. You're crazy. That's not the only reason. Okay, let me zoom out to way out to the monthly chart. AMC had never been above this point. So when it got above that point, it gapped up and it kept moving, right? It came back and filled this gap right here, right at the support level, filled this gap and bounced, working on bouncing. And if you don't find the irony and the humor in that sort of thing, then I don't know what to tell you. But what that does is give me a huge vote of confidence moving forward, because now we have been trading nonstop above that gap for the last 2 weeks. So we have now filled that gap and we've gone above it. Now, if we want to dig even deeper into the gaps, these are all gaps. Every one of these is gaps. That's why you see these big green candles, because when it's coming back, it's filling these gaps. These are gaps. It needs to fill them, and it just rips right through. There's no coincidence that the tip of these candles, the wicks, are lining up right with the bodies of these other candles. They're filling the gaps. So we have filled this gap and built a beautiful base, which is now going to become support. And it's going to go the next. I'm looking for this gap fill from here. And if you want to look all the way back here, it kind of got filled, but that's a partial fill. It still needs to at least fill this much of this gap from 48 to 49. But even then, this price action, anything below 50, 2-ish. This is all just wild price action. There's no signified like this, okay, we can chill out here for a while. No, it's down, I don't like it, right back up, down, right back up, plummet. This whole range here is a gap. So once it fills, you know, the more of these little candles we get filling this gap, the more likely it is that it's not going to come back below this area once it goes back up. These big, huge candles look fantastic, but you see what happens. The gaps that it creates always get filled eventually. So that's all I've got for this video. Went on a little longer than I expected. I apologize for that, but it is what it is. If you liked it, drop a like. If you want to see more content like this, like I said, I got some more stuff coming out. I'm gonna be keep doing my daily AMC updates. I've got some interesting things in the works for the coming days, this weekend, tonight. So I appreciate your time. Thanks for watching, and I hope you guys have a good one.